Please, you're all welcome to today's session of Public Sector Accounting. Solve with me session, a revision session that is personally organized by myself, my good self, good, to ensure that students are able to solve as many questions on preparation of financial statements, analysis of financial statements, and IPSAS. So quickly, I would like us to go through this material. Are you okay? I would like us to go through this session, this question. So please, I'll be muting all of you because I wouldn't like anyone to interject. Okay, so if you have any question, kindly note it down. If you have any question, please note it down. I will ask for questions at the appropriate time. Thank you. So let's start. So if you go to the examination hall and you happen to meet this question, how will you solve it? How will you solve it? What are some of the key things you have to take note of before you begin? So let's start. So this question is talking about what? The following trial balance was extracted from the records of Department of Social Integration, a central government department, for the year ended 31st December. So he said that what? The trial balance was extracted from the books of what? Department of Social Integration. So please, the department we had, no, the department is not the same as from the consolidated fund. Department is not the same as consolidated fund. They didn't say that this financial statement is extracted from the consolidated fund. They didn't say that. They didn't say that this financial statement is for the central government. They didn't say that. So when you go to the examination hall and you get a question from the consolidated fund, whereby they say that the trial balance is extracted from the consolidated fund or from the central government, please, what it means is that the financial statement, it relates to the central government. The financial statement relates to the central government. So that one, we have a way of preparing it. In fact, it's the same thing, but the revenue changes. Are you okay? Or if the question says that the financial statement is extracted from a metropolitan, a municipal, or a district assembly, something metropolitan assembly, something municipal assembly. Though that one we relate it to what? Local government. That one too, we have a way of what? Preparing it. Are you okay? If it is from the metropolitan assembly, if you see the trial balance is extracted. Okay, good. You get it. There's a way of what? Preparing it. Or lastly, any other financial statement that comes apart from these two, any other financial statement that comes apart from these two is called financial statement relating to what? Covered entity. Now, this financial statement relating to a covered entity could be financial statement for MDAs, agencies, or universities, or hospitals. Are you okay? They are all what? Covered entities. You get it? Perfect. So please, this one is relating to what? A department. A department. So if it's a department, it is an MDA. Please, you have difference between MMDA and MDA. MDA is what? That's the department ministries. Okay. So that's the MDA. Ministries, departments, and agencies. Okay, let's start. So this particular financial statement relates to what? Relates to a department. So if it's a department, obviously it is a covered entity. Is that also? That is so. So once we have established that, then we go to the requirement. Requirement. Prepare in compliance with the International Public Sector Accounting Standards, the Public Financial Management Act 2016, and the Chart of Account of Ghana. A statement of financial performance for the year. B, a statement of financial position and a separate statement of budget information in comparison with the actual for the year ended. Perfect. So let us begin. Good. So let's start, please. So my first requirement will be that what I should prepare statement of financial performance, statement of financial position, and comparison. So first one, this is my first one. What the name of the company is? What Department of Social Integration. So Department of Social Integration. So Department of Social Integration. So we take the first one, I. Statement of financial performance for the year ended 31st December 2023. And that is neatly. So under that, we have our revenue. Now remember, you see, so we put the currency with the three zeros. Perfect. Are you okay? So because this is what? Covered entity, you already know the revenue items, okay? Or you know the line items relating to what? A covered entity. The first one will be receipt from government. Second one will be IGF. And the third one will be donation and grants. It's the same thing, right? Perfect. Then you have our total revenue because this is what. Please just be fast too. Very fast. Very, very fast. You don't think there. Don't go and think there. And please, when you go to examination hall, don't put in your mind that you are going to balance it, but rather focus on passing rightful entries so that you can finish on time. If you put in your mind that you are going to balance it no matter what, that is where you go and waste 3 years on one question. So here, write compensation. Here, you write use of goods. Because at the end of the day, it is text that matters. Consumption of fixed capital. The rest, as and when they come, I write it. Are you okay? As and when the rest comes, I'll write it. For you know have all the expenditure lines. So I'll hold on to it. Now, very fast too, very fast. Go to the next one. B or the B, yes. So you have the same name. You write the name of the department. Don't say you have written it at the top, so it is enough. No, it's not enough. They are all separate books of accounts. Department of Social Integration. Neatly. So you have statement of financial position. That's at 31st December. Good. And like neatly. This is a balance sheet, right? Good. So the balance sheet, as you already know, you have your non-current assets. I've actually merged my screen because, or I've minimized my screen because I want to see all so that I can divide it. Okay, well, I want to divide it. So current assets. So I want to see the full screen so I can divide it well to the current assets. Then go to current asset has a lot of transactions. Current liability. Then go to non-current liability. Then go to accumulated fund. Then go to surplus or deficit. Depending on what we get, are you okay? That will be this will be my total. Good. My total assets will be here. Total assets will be here. That's it. So I've divided the book nicely. Forgive my handwriting, eh? So we go. Next one is examination pressure. Oh, that's what my writing is like that. Amanda, examination pressure. C, department of social integration. Underline it neatly. Good. So you write. What are the CC? You see that's what? A separate statement of budget information. So statement of budget information in comparison with the actual. Perfect. So we'll get to that. We'll get to that. Okay, we'll get to that. So we go to the next one. D. So that is that. I think that's all. A to C, we are done. So let's go. Department of Social Integration. Underline it neatly. So we have what? Workings. They didn't say you should show a note to account. So just show your workings. You are done. Assuming they say note to account, you write here note to account. Note to account is the same as the working. Are you okay? The moment you finish writing your note to account or working, the next line you write into brackets. All amount are in let them know so that in case you don't bring a Ghana city, do not mark you wrong. You have indicated it at the top. This is done practically. Practically, when you take a financial statement, you go to the working, you see this. Are you okay? We will not write any policy. We will not write any policy. If you write it, it's not wrong. That the financial statement is prepared in line with accrual basis of accounting. The financial statement is prepared using IPSAS PFM Act, PFM regulation. Okay, the inventory is measured at the lower of cost and net. All those things, no, please. If you write it, you are not wrong. But since the question didn't ask you to prepare note to account, the question didn't say you should prepare what? Note to account. Assuming T, they said prepare note to account, then I will do that. If the question didn't say you should prepare note to account and you do it, you are wasting your time. Do not give you any mark for that. Are you okay? Perfect. So I'll start. So I'll write my revenue items. What is my revenue item? Receipt from government. So please, in your case, when you are learning, make it a full page. Because in the exams, the paper is too small. You cannot write some here, write some here. You cannot write some and write some here, IGF. You cannot do that in exams. So write the full one. As in to say, you see, this will be the marginal lines or the margins. So you should write receipts from government in exams. Do it like this. Don't split it and go and write receipt from government IGF. The paper is too small. You cannot do that. So when you are learning, actually be practicing what you be doing in exams. When you are learning, are you okay? When you are learning, you should split it into like that. Write this on the full page. Thank you very much. So let's go. IGF, don't write IGF, write everything. Internally generated fund. You should write everything. You are the student. Okay, good. So this receipt from government usually has a lot of transactions. IGF has a lot of transactions, plenty transactions. IGF. Receipt from government to the same, but IGF has a lot of transactions than this. So always, you should know this before you go and write something immediately under IGF. If not, you cancel it. Goods and services too has a lot of transactions. No distance. Compensation too has a lot of transactions, but it's not as much as goods and services. Are you okay? Or IGF. So be solving more questions. Are you okay? Good. So let's go question 3. Let me see question 3. 3. Donation slash grant. Perfect. So let me finish my revenue. When I finish, I count to the expense. Okay. So let's go. Revenue. You had the first one. Rent. Rent is IGF. So rent. I've started though. Rent is IGF. Cancel it neatly so that it doesn't confuse you. Know that you have done it. Now we go to the next one. PPE. You know PPE, right? They will give you the cost and they will give you accumulated depreciation. So all this accumulated depreciation, accumulated depreciation, accumulated depreciation, accumulated depreciation. This is the cost, this is the cost, this is the cost, this is the cost, this is the cost. It will be used or it will assist us to prepare the PPE schedule. It will assist us to prepare the words, the PPE words schedule. So I'll not touch that one. Good. Come on. Payables. We all know what payables is, right? It is a liability. Donor support. Donor support is what? It's a donation. Donor support. So donor support. How much? Yeah, good. Okay, proceed. Tender security. Please, do you know what tender security is? You see, sometimes if public sector, they want contractors to come and do a particular job for them, okay? In the procurement process, they will include, okay, if maybe a public sector wants a contractor to come and build a school, or a public sector wants a contractor to supply them with something. Usually, it is in the construction of a project. Maybe they want a contractor to come and contract or come and construct a road for them. Are you okay? They will include as part of the contract, this one, how they call it, the procurement measures that the contractor should include what we call tender security. The tender security is that you will not withdraw when you tender. You see, because in the course of the tendering, in the course of the procurement process, as part of the procurement process, they will solicit for a lot of what applications, okay, or a lot of tender from so many contractors, and the process will take a while. Are you okay? And in the course of doing that, they'll be sorting. They will disqualify some contractors, and some contractors will proceed to the next stage. Are you okay? They don't want a situation whereby from the lot of contractors that applied, they'll end up selecting you. After selecting you, you tell them that, oh, I'm no more interested. After they have incurred a lot of cost, they've taken so much time to select you or to choose you as a final candidate to come and do the work. You tell them that I'm no more interested. They don't want that. So they'll tell you that in the course of applying for the tender, include a tender security. So the tender security could be money. It could be a bank deposit. Are you okay? It could be a guarantee from a bank that in case you default or in case you withdraw from the tender, even before the tender concludes, you pay a specified amount to the company that is doing the tendering or the company that is doing the procurement. Hey, but we have engaged you. We said that we didn't force you. We said we need somebody to come and construct a road. And you have applied and you have finally been selected. After you are selected, you say that no, I will not do it again. Do you know the implication? The implication is that a lot of people applied. Hence, the company, because of you, they disqualified other people who qualify. They disqualified other people who qualify because of you. They've taken so much time in order to select you. The company has hired people to come and do the sorting and other things. After selecting you, you say that I will not do it again. You not do it again upon all the cost that the company has incurred. It's like you, some of you, a company will go through a lot of application processes to what? To select you to come and work for them. After they select you, hey, you say that I'm no more interested. Do you know the implication? The implication is that because of you, they have disqualified somebody who also qualifies. Because of you, they have wasted so much time just to select you and you say, I'll not do it again. So therefore, in order to ensure that the contractor remains committed to the cause, to ensure that the contractor, after he select you, you will not say, I will not do it again. You will say that as part of the procurement processes, include a tender security, so that in case you run away, or you say you not do it again, you will take the tender security to offset the cost of the what? Of giving you the contract, the cost of selecting you, that administrative cost that we have incurred now. We'll use the tender security to offset it. Are you okay? So tender security is money that is deposited with the what? With a government entity. Are you okay? That if the contractor does not withdraw and remains within the contest till the contract goes to an end, we'll give him back his money. That money is not for this one. We'll give it back to you. Are you okay? It's not, the money does not belong to the public sector entity. No, it belongs to the contractor. Just that it's a guarantee that in case you withdraw before the time, then the public sector entity will take it. Are you okay? So tender security is a liability. I know some of you were calling me, saying, what is tender security? System, what is tender security? How should I post it? Please, it's a liability. Are you okay? It's money that is held by the public sector entity in case the contractor should withdraw. Usually, they remain committed. They don't withdraw because of the tender security. So the public sector entity gives it back to them. Are you okay? So it's not an income. It is a what? It's a liability. Good. So we have this. It's a liability. Come here. We have accumulated fund. You and I know that accumulated fund is a what? It's accumulated fund. Like I told you, at the credit side, you get your revenue at the credit side. Okay, when you go to the statement of financial performance, sorry, statement of financial position, when you go to the balance sheet, you have your liabilities here and you have your what? Your capital. By in PSA, I told you that we don't say capital, we say what? Accumulated what? Fund. So you have your accumulated fund and your liabilities here, as well as your what? Your revenue. Is that also? That is so. So we have this one. The compensation for employees. Listen, compensation for employees, meaning that the government, at the end of the day, pay compensation to employees. So therefore, it is a receipt from government. Receipt from government, compensation for employees. It's the government that paid the compensation of that department. I told you that when you get an expenditure item sitting at the credit side, it means that it's the government that is paying that expenditure item for that particular company. Are you okay? So you have an expenditure item compensation sitting at the credit side. What it means is that it's the government that is paying it. Do you get it? So you write it here. Compensation for employees, right? Good. Go to the next one. The next one is what? Use of goods. Use of goods expenditure. So use of goods and services. It means the government bought the goods and services for the public sector entity. That's what it means. Next one is capital expenditure. It means the government built a capital item or the government gave the department that capital expenditure. So capital expenditure, assets, government bought assets for them. The government bought the asset for them. So I've underlined all. I'm done. I'm done. I'm done. Are you okay? We will not close it. Oh, don't add it yet. Let's finish the footnote. Probably there might be something in the footnote that will affect it. Hence, I will not close it. I will leave it like that. Perfect. Now let's proceed. So I come here for compensation. Compensation of employees. So I'm come to finalize it here. Are you okay? Leave enough space. Go to the next one. Go to the next one. 5. Use of goods. Use of goods. All right, use of goods here. So the rest, as and when it comes, I'll write it. Are you okay? Now, when you go to the debit side, that's where you get expenditure. Expenditure is at the debit side. Expenditure is at the debit side. Are you okay? When you go to the balance sheet, you have assets to be at the debit side. Are you okay? It's also at the debit side. Good. So let's go. Establish post for taxing. Establish post. Establish post is compensation. So establish post for taxing. Okay, let's proceed. Non-established post. Non-established post is also compensation. Non. I've been telling you, don't go and write everything on all the wedding. There's no time. Everything within 40 minutes, you go and write the wedding. Car maintenance allowance. It's an allowance. Car maintenance allowance, 800. Travel allowance. Listen, no, travel allowance. The allowance they add to your salary for traveling. Those who travel a lot, you have travel allowance as part of your salary. But if you see travel per diem, if you see travel per diem, okay, that one is goods and services. Are you okay? Travel per diem needed when you travel. The daily 50 cedis, 50 cedis they give you for every day if you travel. I think they give you some 50 cedis for expenditure whilst you are at that place. Okay, because in the course of traveling, maybe you buy pure water, you buy this, so they give you some small per diem. Are you okay? That is different from travel allowance. With the travel allowance, whether you travel or not, they will give you travel allowance. With the travel per diem, it's as and when you travel. That's when they give you the travel per diem. So travel per diem is actually for administrative expenses whilst you are on your trip. Whilst you're on your trip, maybe you see something, you see coffee, you want to buy coffee, use the travel per diem to buy it. Are you okay? When you, I mean, maybe you need extra sugar. You need extra sugar. That's why they give you travel per diem. Use the travel per diem to buy it. Are you okay? That one is not. It's that one is administrative expenses. Are you okay? But travel allowance, dear, that one is an allowance on your salary. Perfect. Let's proceed. TNT, TNT, administrative expenses. Why am I putting this TNT? Hey, Minister, let's go to goods and services, child. TNT. You see, repairs. Training. Training. So students keep saying, Sir Steven, you are good. Yes, Sir Steven. Yes, Sir Steven, I like the way you teach you. But there's no evidence to show. Please, I need an award. I need an award, please. It's not nice for me to stand there and somebody will be taking best PSA students. And that student is not from SMB. It's not nice please. I need an award. Someone can break that yoke. Think upon seeing the award thing, I'm more gingered. Other than that, This weather day, I would have been sleeping up. But I told myself that I need a word. So I had to wake up and around 1 o'clock, printing material. I told you any kind of inventory. Printing material is an inventory. Any kind of inventory, be, don't worry. Send it to goods and services. You are right. Are you okay? Life is simple. Oh. The effect is the same. Printing material. Okay. The effect is the same. So send it here. Good. Utility. Life is simple. Life is simple. Eh? Utility allowance. You see your utility allowance. So put it here. Utility allowance. 200. Right. Literally good. Cost of living allowance. Cooler. Cost of living allowance. Cost of living allowance. How much? 1800. Pension and gratuity. Pension and gratuity is related to what? Compensation. Pension and gratuity is related to compensation. So pension. Pension, of course, is related to compensation. Meet. SSF contribution, social security contribution. So, of course, net contribution. Okay, contribution. Social security fund contribution. Meet. Random, random. Somebody will ask, what is random? In your this one, don't you have in your when at your workplace, don't you have what you call your friend is saying there's a name for this thing. Miscellaneous expense. So it's goods and services. Okay. You rounding to the nearest whole number, rounding to, I mean, you clearing some pending balances, small balances like 0.03 and all those things. And send it to miscellaneous expense. Are you okay? So rounding is, hey, there's a compensation. Sorry, it's goods and services, child. You say goods and services, and I'm writing it as compensation. So rounding is here. Are you okay? It actually means nothing. Rounding to the nearest 100, rounding to the nearest 1,000. I mean, that's small coins now. Round off, yes, round off. Annabelle, you're correct. Round off. You run off to the nearest. That's small coins. That's small percentage. That's small. Sometimes 50 pesos. Sometimes 1 cedi. Get it. That's small decimals. You write it off to the miscellaneous, and the miscellaneous you go to round off. It's there. Okay. So it's nothing. It's nothing. It's goods and services. I told you, if you have expenditure, you don't know where to put it. Put it under goods and services. Most of the times, it is correct. 100% right, right? So if you see some of these things, just send to goods and services. Okay. It's an administrative expenditure. Hmm? Hmm. Now rent, you pay rent. Please, when the company pays rent, where do you put it? You put it under what? Goods and services, right? You paid rent in a year, administrative expense, put it under goods and services. Thank you. Bank charges. So run off next like bank charges. Special audit fees, of course. Special audit fees, administrative expense. So goods and services need there. Any expenditure incurred in the cost of funding the company. Okay. So you have receivables, inventory, all these are assets, fixed deposit assets, cash and cash equivalent assets. Then you have this one, other expenses. So let's go to the next one. So six other expenses. Balance go down. Balance go down. 5,000 other expenses. Meaning the ones I've not cancelled. The ones I've not cancelled are what? Are either going to the what? The statement of financial position as an asset, or is going to the statement of financial position as a liability. So when you come here, the ones I've not cancelled are going to the statement of financial performance as a liability. So this one there, this one is for the PP schedule. Then you have this one. Payables is a liability. Tender security is a liability. Accumulated fund is accumulated fund. You have all these ones to be assets on that. Ladies and gentlemen, this brings me to the end of the posting. Okay, even without going to the footnote, I've gotten more than 50% of the marks because all these are tips. I've gotten more than 50% of the marks. So the thing is so simple. Somebody, when they start, they go and read the footnote and they'll start panicking. Yeah, how will I do it? Yeah, how will I do it? Hey, this thing, Master, don't go to the footnote. Just go and do the posting. After I finish the posting, now let's come to the footnote. Remember, do what you can do. The ones you cannot do, just keep it. Don't go and kill yourself. Are you okay? It's all about what? Ticks. It's all about ticks. But please, that's why we are learning. Okay. So before you get to the examination hall, I might have taught you everything. However, if you come across any transaction you don't have any knowledge on, please and please again, just do it the best way you can. Are you okay? The best way you can. Do you get it? Good. So any questions so far before you go to the footnotes? Kindly raise your hand if you have any question. Okay, good. I see a hand up. Yes, Gabby.
Hello, Zay.
Yes, my boss.
Zay, please, you've not added the inventory. That's inventory of 860 to the goods and services.
Oh, but remember I cancelled it. 800. Or it's not that one?
Zay, it's not that one. No. There is another 860 inventory down there.
Hey, sorry. This one, eh?
Yes.
Yes, I would have seen it, cry. I would have seen it, right? Yes, inventory. Thank you. Because there's no way you send an inventory to the balance sheet that be. The one that go to the balance sheet is the closing stock of inventory. Do you get it? Yes, the closing stock of inventory. And that one will be given to you in a footnote. Do you get it? Thank you very much. So, thank you so much.
Yes,
That's nice.
yes, sir.
Yes, please come in.
With the workings, can you abbreviate? Can you just shorten your distance?
Yes, that's what I've been saying all along. Are you okay? No need for you to
Yes.
write everything. It's the figure they're interested in. So shorten
Okay.
it. But don't go and abbreviate.
I understand.
Don't go and write. So special audit. Like you want to say special audit. Special audit. I'm writing special audit. Is correct. Don't go and write S-A. Hey. Okay, good. Any other question, please? Okay, good. So let's proceed. Yes, Mr. Azuri. Okay, your hand is down now. Okay, let's proceed, please. Back to mute. So let's go. We are done. Now let's go to the footnote, one after the other. Good. So we have I. The department prepares its financial statements in compliance with international public accounting standards. Okay, you say okay. So that's the first footnote. I'm done. Hey, I've gotten it correct. Nothing difficult. Just say okay, and you have gotten it correct. Let's go to footnote 2. Included in printing materials and stationery is a closing inventory valued at 330,000. Remember that at the footnote, every transaction is supposed to be treated twice. At the footnote, remember that the currency, okay, the 3 zeros raised the power does not affect it. These 3 zeros does not affect anything at the footnote. Are you okay? And remember, at the footnote, all the transactions here have not been entered. You are about to enter it. Are you okay? They've not entered it yet. So you are about to enter it for the first time. Know all these terms. Are you okay? So let's go. And also remember that the footnote, the concept, you have already done it in class. You have already done all the concepts in class. But I see you try to twist it a bit so that it will not be like they have copied the same concept. But the truth is that they have copied the same concept. Always know that the concept is always the same. Just that will twist it a bit so that it will be like it's different. But trust me, it's the same thing. I've told you this. So let's go. Included in printing materials and stationery is a closing inventory valued at cost of 380,000. Okay, closing inventory valued at cost. So please, let me do some small workings here. Not really workings. So inventory, they said printing and material, right? Did the inventory. So they said it's valued at cost. The cost of the inventory is what? 380,000. Proceed. The estimated realizable value, net realizable value. So they said the net realizable value is what? The estimated net realizable value and replacement cost of the inventory are this and this. So net realizable value is 320,000 and replacement cost is 330,000. You get it? The printing is not for commercial purpose. The printing is not for commercial purpose, meaning the printing is not for sale. The printing is not for what? Sale. The printing is not for commercial purpose. You understand? You know the principle, okay? It's as 12, okay, on measurement of inventory. You see that what? Inventory is measured at the lower of cost and net realizable value if the inventory is for sale. However, it will be measured at the lower of cost and net replacement cost or current replacement cost if the inventory is for use in a company or is for distribution. If the inventory is for distribution, they will use the replacement cost. Or is for use in the organization. They are using it in organization or they are just distributing it free of charge. Then we'll use what? Replacement cost. Are you okay? So we'll use replacement cost because the question says that what? The printing is not for commercial purpose. The printing is not for commercial purpose, meaning that the printing is within. They are using it in organization. So therefore, between this, so this one automatically goes off. So between this and this, no, which one is the lowest? Is this one that is the lowest? Is the lowest. Are you okay? And I told you that when you get a closing stock of the inventory, first of all, come and subtract it from goods and services. So you have closing stock. Let me write the full thing. Let me write the full thing. Come and subtract it. 330. Don't bring the 3 zeros because you said everything is with the power 3 zeros, right? So 330. Then this same 330, go to the balance sheet. Go to the balance sheet, right? Inventory. Right. 330. Because over here too, you have with the power 3 zeros. I'm done with the second footnote. Footnote 2, done and dusted. Okay, good. Let's proceed. Next one. Let's go to the next footnote. Footnote 3. Footnote 3. In June 2023, the government conducted a massive recruitment into the civil services, of which 20 employees were posted to the department. However, they have not been paid salaries for the period. You see, 20 employees were posted to the department. However, they have not been paid salaries for the period. The amount owed these employees is 2,500,000, and this should be reflected in the financial statements, meaning that they have not recorded it in the financial statement. In fact, they have not recorded it. That is why they are now giving it to us. Are you okay? Good. They have not. So please, you see this 2,500,000. The amount, 2,500,000. We are owing them. And you know how to treat owings. We forget that it's 20 employees. We forget that they were employed in June. They are all gimmicks, like I said. They'll try to use strategies to make the question and see if it's a different thing. But the truth is that they have not recorded this in their books because they are owing them. And because they are owing them, they decided not to record it because we've not paid. So why should it bring it on the statement of financial, on our financial statement? If you are owing them, if not pay them, why should it come on the financial statement? But the truth is that with accrual concepts, you have to recognize an expenditure once it is incurred. Once you have incurred it, once you have used their services, no, you have to recognize it. So with the owings, no, you have to add it to the what? to the compensation, add it. Whether you have paid or not, you have used the services for that period. Okay, so you come here, compensation. Okay, so right, salary owing or salary outstanding is the same thing, which is 2,500,000. This money you are owing it. Are you okay? You've not paid. So please add it to your payable. So you push it straight to payable. You already know that, right? Send it straight to your payable. Okay, so open a small payable. That you send it there. Okay, let's open a small payable ledger. Let's go. Payable ledger. Okay, good. So footnotes working 7. I'm done. Agbena. Life is simple. Agbena. Life is simple. You see the same concept. I told you the same thing. Are you ready? Shall we? Okay, let's go. Next one. It says that what? The department currently pays rent for 2 of its regional offices. The department currently pays rent for 2 of its regional offices. And at the end of the year, rent of 200,000 was outstanding. If they say rent of 200,000 was outstanding, do you know what it means? It means that we are owing rent of 200,000 because we pay. So if it is outstanding, it means we have not paid yet. And anytime they tell you something like this, it means that the accountant has not recorded it because he said that, oh, we have not paid it yet. So he has not recorded it. That is why they are telling you. They are bringing it to your attention because they have not recorded it yet. Rent of 200,000 is outstanding. So if it's outstanding, it means that you have to add it to our books and bring it to what? Payables, meaning we are owing it. So rent outstanding, which is the same as owing, bro. Outstanding is the same as owing. So rent owing. Add it to your payables, meaning these are the monies I'm what? Owing 200. Then this rent, add it to your rent. Please, where did we post rent? Please, where did we post rent? We posted it here. So rent owing. Add it to expenses. So the expenses will become plain. Add it. I've added it, so maybe I'm done. So I'm done with the first part. Further, the department also rented part of its premises to the headquarters. So the department, we also rented part of our premises. So we rented part of our premises at the headquarters. Is that also? We rented. So when we rent, we receive income, and the income goes to IGF. Know that. If you rent, you receive income, and that income will go to IGF. True of us. True. Proceed. At the end of the financial year, the amount of 150,000 was received to cover 2024. Hey, at the end of the year, an amount of 150,000 was received to cover 2024 rent. We are in 2023, and we took 2024 rent. What does it mean? It means that we have taken rent that does not relate to 2023. We are receiving a rent, and we have received rent that relates to 2024. So what do? Please reduce it from your IGF. Like I said, the IGF has been bloated. The IGF has been bloated. It contains rent that relates to 2024. So that is rent prepayment or rent received in advance. So rent in advance or rent prepayment. Rent in advance, right? Rent, bracket, advance. Rent that you have received in advance is how much? 150. Now, this rent that we have received in advance now, how do you treat it? Do you treat it as a payable or we treat it as a receivable? We have collected rent that does not relate to the current year. So this rent, it will be treated as a what? As a payable. Is that also? They can come for it at any time. They can come for it at what? Any time. Is that also? So it's a liability to us. We have income on earned income. Are you okay? So that rent, treat it as a what? As a deferred income. Are you okay? Deferred income to 2024. or you add it to your payable, anyhow you want to treat it. Let me add it to my payable as what? Rent in advance. Rent received in advance. How much? 150. Not just say, I'm supposed to pay it. Or if you like, don't bring it here. Go to your statement, the current liability. Are you okay? Then go and write deferred income. Bracket rent. 150. You are correct. Or you can add it to your payable. 150. That one too, you are correct. Ah, I believe you know you less it. And so you less it. And so there's a bracket. Someone is asking, say, won't you put it in brackets? And I'm asking, can't you see a bracket? This money contains 150, which is not so related to this year. So you less it and send it to your payable. Or you less it, you take it from there, go and put it under your liabilities. That next year I will enjoy from that. It makes sense, eh? Owusu, Osei, Enchua, your eyes. I think your eyes, oh, your eyes. You're eating Kibo Gari, thinking it's not Gari. Some people think Kibo Gari is not Gari. Oh. Some people think Kibo Gari is not Gari. Oh. Do you know that? Kibo Gari too is Gari. They don't know. Okay, let's proceed. Meanwhile, 20,000 rent has not been received from tenants. Meanwhile, 20,000 rent has not been received from tenants for the year 2023. Oh, tenants are people owing us. Is that also? And we have not received 20,000 rent for 2023, meaning the rent relates to 2023. So if it relates to 2023, let me put it here. Tenant rent. So that one go to IGF. This 20,000, it goes to IGF. They are owing us, but it relates to 2023. So we have earned it. Is that also? So put it there, 20,000. But then have you received it? No, we have not received it yet. So if you have not received it, what do? Come here and put it under what? It. Put it under receivable, meaning money you're expected to receive is the what? 20,000 from tenants. I've not received it yet. So you see one footnote, no, it is 3 in 1. But you take it one after the other, one after the other, one after the other, and you are done. Nothing difficult. You take it one after the other, one after the other, and you are correct. Okay, good. So let's continue. So we go to the next one. Then, consumption of fixed capital. It is for calculating of what? Depreciation. It's for calculation of what? Depreciation. If you follow my class, I tell you that depreciation, the last thing you do. Why? Because there might be other footnotes that will affect your PPE schedule. So you don't be in a rush to prepare the PPE schedule. It's the last thing you do. Continue, VI. It was revealed that computer accessories costing 340,000 acquired. It was revealed. Oh, somebody's asking, say, how do you treat the rent in advance? Okay, let me take the rent part again. Please, I'm come to tell you about advance payments once again, okay? So let's take it again. It says that what? The department, I'm taking this footnote again, okay? The department currently pays rent for 2 of 8 regional offices. So we are the ones paying the rent. The department pays. So if you pay, it is going to goods and services. Is that also? If you are the ones paying, if you are the one paying, it is going to goods and services. If you pay rent, it is going to goods and services. If you are the one receiving the rent, it goes to IGF. We already know that. Continue. The department currently pays rent for 2 of 8 regional offices. And at the end of the year, rent of 200,000 was outstanding. Rent of 200,000 was outstanding means that you have not paid it. You are owing rent of 200,000. So if you are owing rent of 200,000, go to goods and services and go and add the 200,000. Because you are owing, send it to payable. So this is it, rent of 200,000. I've got it to payable. I'm done. First part. Good. Let's proceed. Next one. Further, the department also rented part of its premises. We rented part of our premises, meaning we will receive income. When we receive income from rent, it goes to IGF. That's one we all know. At the end of the financial year, an amount of 150,000 was received to cover 2024 rent. At the end of the year, we received 150,000 for 2024 rent. So meaning the IGF, no, the money we have received, the income we have received for the year, no, it contains 150,000 that relates to 2024. So go to where you post rent. Where do you send rent to? You send the rent to what? IGF, right? So you send the rent to IGF. This IGF, no, it contains 150,000 relating to 2024. So when it comes to IGF, subtract the 150, okay, and this 150, no, it is a liability to you as at the year end. As at the year end, you are holding somebody's money. If you are holding somebody's money, it's a liability as at the year end. So this 150,000, add it to payable because it's a liability. So you write rent in advance or rent received in advance, 150. So you see, I subtracted it from IGF and I brought it to payable, or I took it from IGF and I brought it to payable. Or this same amount, no, you can also classify it as what? Deferred income. Deferred income to the next year. I've deferred the income to the next year. It's also allowed. Okay. So you either write rent in advance 150,000 here, or you go to the current liability and go and write deferred income 150,000. It's all correct. It's the same thing. Are you okay? God bless you. So that's how I treated the second one. So I decided to send it as deferred income. The last part says that what? Meanwhile, 20,000 rent has not been received from tenants for 2023. So 2023, no, we have not received 20,000 from tenants yet. Under cash accounting, you say that wait till you receive the money. Under cash accounting, once it's related to 2023, wait till you receive the money for cash accounting. But for accrual accounting, which we are using, accrual basis of accounting, it says that what? Recognize revenue once you have earned it. So once I've ended 2023, rent for 2023 has been earned. Whether you have received cash or not, don't wait to receive cash. Recognize the revenue once you have earned it. So this 20,000 is a revenue I've earned. So rent, if you receive rent, where does it go? It goes to IGF. So go to IGF and go and write tenant's rent. Add the 20. This 20, no. Have you received it cash? No. So send to receivable. Monies I'm expecting to receive. So receivable 20,000. Okay, thank you very much. And then anything, what's a bluff? A bluff. A bluff. So we are done. Go to the last one. So we skip the thing. We'll do it later. Go. It was revealed that computer accessories costing 340,000 acquired in 2022. So we are in 2023 now. Computer accessories acquired in 2022 was accounted for as goods and services. You see, we are in 2023 now. Financial statement for 2023. Are you seeing that? And they say that in 2022, goods and services that we bought, computer accessories costing 340,000 acquired in 2022 was accounted for as goods and services. We bought computer accessories and we accounted for it as what? Goods and services. However, the auditor for 2023 financial year recommended that the transaction should be accounted for as non-current assets. You understand it? So let us in general say that this computer that we've treated as goods and services, no, it's not supposed to be there, but rather it's supposed to be a non-current asset. Please, it's the same thing you know. You understand it? It means that what? Correction of error. It also there has been an error, wrong classification. Instead of sending it to PP, we sent it to what? Goods and services. So because of that, in 2022, it made the profit smaller. The profit became smaller in 2022. Why? Because when they treated it as goods and services, when they treated it as goods and services, they subtracted it from the revenue of 2022. When they treated it as goods and services, they subtracted the assets from the revenue of 2022, meaning that the revenue of 2022 will reduce and the profit of 2022 will reduce. Are you okay? The profit of 2022 will what? Will reduce. Is that also? So therefore, we have to correct it. And in correcting it, how do you correct it? So eight. Change in accumulated fund. Change in accumulated fund. Are you okay? That is the correction of error. Okay. So change in accumulated fund. First of all, bring your accumulated fund in the trial balance. Accumulated fund is supposed to be at the credit side. So if you find it at the credit side, then it's a positive number. But if you find it at the debit side, then it becomes a negative number. Are you okay? It's supposed to be at the credit side, and it is at the credit side, so it's a positive number. Assuming I found it at the credit side, the debit side, it would have been a negative number. Okay, thank you. So it is here. Perfect. Proceed. I'm done. I'm done. So after you write it, so now the mistake made last year, we subtracted the asset as an expense. So because of that, it reduced the profit of last year. So please, you have to add it back because we subtracted it last year. You see, when you treat it as goods and services, what do? You subtract the goods and services from the profit, from the revenue. That's what you do in order for us to get our deficit or our surplus. You have to subtract all the expenses from the what? The revenue. What it means is that the asset was subtracted from the revenue of last year. We subtracted it. Meanwhile, it was not supposed to be an expenditure. You understand it? So you have to reverse it. So we subtracted it. So in reversing it, we add back. So computer, we add it back. Add it back. 340. Remember, don't bring the 3 zeros because everything is in 3 zeros, right? So don't bring the 3 zeros. So you add back there, 340. After you add back, then you less depreciation. For 2022, depreciation for last year, 2022 depreciation, because we treated it as expenditure, we didn't calculate depreciation on it. Okay, assuming we treated it as an asset last year, we would have calculated depreciation for 2022 on the computer. But because we didn't treat it as a what? As a non-current asset, but we treated it as a what? As expenditure, we didn't calculate depreciation on it. So now that we are treating it as a PP, we are assuming that we are treating it as PP last year. So last year, we calculated depreciation for last year. You see, assuming when the accountant bought the computer, they treated it as a PP or they treated it as a non-current asset, they would have calculated depreciation on it for last year. True of us, true. But because they treated it as goods and services, they didn't calculate depreciation on it. So therefore, if you are correcting it, then please, you have to what? Calculate depreciation on it. Is that also? So let's calculate the depreciation. So the depreciation will be last year, the cost of 340,000. Now computers are depreciated by 3 years divided by 3. Is that also? So did they give us a date that they bought the assets? They didn't give us any date. They didn't tell us that they bought the assets in, let's say, April. If they bought the assets in April, then April to December, I will multiply by, let's say, 8 over 12. If they bought the assets in October, then I will use October, November, December. I will multiply by 3 out of 12. Are you okay? Because they use the assets in October, November, and December. If they bought the asset in June, then I'll multiply it by 6 over 12. Because if they bought the asset in June, it means that they used the asset in July, August, September, October, November, December. So 6 months. Are you okay? So depending on when they bought the asset, that is what we. But here they didn't state it, meaning that they bought the asset in January. If they didn't state it, it means a full year. It means they bought the asset in January. Are you okay? So when you divide this, what do you get? You get 113 point something something. Let me take the whole number. So depreciation will subtract. Depreciation will subtract. So you get what? 200, 437. I'm done. I'm done. Okay. You see this one? You add it to your PP as addition. This one, you add it to your accumulated fund. This one becomes your new accumulated fund. Remember, I've used this accumulated fund. This accumulated fund, no, I've adjusted this accumulated fund, so cancel it. Anyway, I've now adjusted. So this is my new accumulated fund figure. My new accumulated fund. So this one go to the statement of position. Okay, statement of financial position. So send it there, 200, 437. Yeah, yeah, accumulated fund. 200, 437. Okay, accumulated depreciation. Sorry, I think I said accumulated fund. It will go to accumulated depreciation. Yeah. Very easy. I'll got your accumulated fund there. So go to accumulated depreciation. You add it to accumulated depreciation. This will go to statement of financial position. This you add it to your PP as addition. Okay, because a new asset. But remember, you bought it last year, but so you add it. Okay, thank you. So now that you are done, I think we are done. That's all. Okay. So we are done with this too. So let's do this and this. So let's do a PP schedule first. Then we'll do the last one. So PP schedule. Let's go. We have the cost. So let me take it on there. So you have, you write the name of the assets here. Motor vehicle. Okay. We have furniture. Okay. We have computers. You have premises. I've told you to be doing this because there's a marks that they give you for just the PP schedule, so they don't lose any mark there. Just do this for them. You write a cost. The cost 84,000, 42,000, 14,000, 120, 400. Good. Addition. Did they buy any new assets? They didn't buy any new asset, but then there is an asset that they didn't post it well in last year. So we have corrected it. So therefore, addition. 340,000. Okay? The new asset they bought. Or the new asset for last year. They've not included it. So it's not included it. It's not included it. Is that also? Okay, good. So we have premises. Premises is dash. You get it? So now you've added the computer to the PP. The accountant says that add the computer to the PP. So you've added the computer. That's it. Are you okay? Good. So you have 8, 4, 4, 2, 1, 4, 3, 40, 1, 2, 400. Perfect. Then you go to accumulated depreciation. That one too is given to you in the question. You have 25,000 total depreciation. 16. Then we come here. 4,000 plus the accumulated depreciation. This one is related to last year. Last year. This is the depreciation for last year. So put it there. Last year depreciation is accumulated depreciation. 2022 depreciation is accumulated depreciation. That's why I've added it to accumulated depreciation and not depreciation for the year because that is last year. This depreciation relates to last year. Thank you so much. So you go to the last one, which is 2. Put it in brackets. Neat. Now you come to depreciation for the year. Depreciation for the year. Okay, we go. So remember, it says that what? Motor vehicle is 5%. Motor vehicle is 5%. So on cost to any, it says that what? Consumption of fixed capital into bracket depreciation of fixed assets is charged on a straight line basis. Straight line basis, meaning the cost divided by 5. So what is the cost? So working so, which is not necessary. Don't go and show this working, no. We don't have time, no. Motor vehicle. 84,000 divided by how many years? 5. Here's what you get. 16,800. That is the depreciation for the year. Then I'm going to put it there. 16,800. So depreciation for 2023. 16,800. Good. This one, the cost. What is the cost? 42. Furniture and fittings, 42,000. Furniture and fitting, 42,000. How many years? Furniture and fitting is 4 years divided by 4. Please, what's the answer? 10,500. 10,500. Okay, computers. Let's go. Computers. So computers is 3 years, right? So computers, no, what is the cost? The cost for the first one is 14,000. The cost for the second one is 340. The two together makes 14,340. Are you okay? So computers. The two cost makes 14,340 divided by 3 years. Answer, please. 4780. Thank you. 4780. The last one, we have 120,000, 12400. That is what? Premises, right? 12400. They say 12400 premises. 20. Please answer. Don't go and show this working for this one, no. Depreciation, no. 60, 20. God bless you. Yes. This is the current value. Answer the first one, please. Please, just subtract 8,000, 80, 48, 84,000 minus 25,000 plus minus 16,800. Please, the first answer. Okay, the second one, please. Please, the second one. 42,000 minus 16,000 minus 10,000. 15,500. Thank you. Okay, good. Thank you. The next one. 43, 340. Yes. Okay, good. The next one, please. 2,400 minus in the chat box. Okay, premises is 92, 380. Is that also? That is so. So you see these ones now. Go and write it there. Oh. PPE 42,200. Please give them to me again. PPE. PPE 42,200. Then have the next one, furniture and fittings. 15,500. You have the next one, computers. Computers. Then have the last one, premises. $92,380. Good. Thank you so much. We are done with the posting. Now we can tell me the total depreciation for 2023. Who can tell me the total depreciation for 2023? Okay, 38,100. Thank you. So total depreciation for 2023 is 38,100. Let's go straight to consumption of fixed capital. Consumption of fixed capital. 38,100. Okay, good. So I think we are done. We are done. Once we are done, we can now. You know something? Let's do something here. Let us post the balance sheet items first. Let us post the balance sheet items first. Let's be fast, before we come and do the addition. You know I'm saying that? So if I need to stay stop work, I'll get ticks from the balance sheet too. Because come to add them, no. If this is stop work right now, if the addition is wrong, it will not affect anything. So receivables, let's go. Receivables, send it here. Let me put them first, okay? Receivables. Oh, no, let me go and add it to receivables since I have a receivable ledger. I have a receivable ledger, so put it here. Good. Here, fixed deposits, balance sheet. Cash and bank, or cash and cash equivalents. I'm done. Maybe let's go to the credit side. Payables. Add it to your payables, okay? Good. Tender security, current liability. Tender security, 900. It's a short-term liability. Review. Now I can add everything. Okay, let's go. Please, quickly. Don't waste time. The first one, please. Okay, I'm meeting all of you. You mentioned the name of the line item and the total. Please, you're muted. Receipt from government.
Receipt from government, 17,100.
Okay, thank you. IGF.
$1,720.
Okay, good. Yes, compensation, please.
Please, 12420.
Okay, good. Use of goods. Use of goods.
The 5150.
Payables.
10150.
Okay, good. So that's that. That's that. So 17,100. Receipt from government. Seventeen 20. IGF. Donation and grants. 120. This total. Total, please.
220.
Thank you. Let's go. Next one. So compensation. 12,420. Use of goods. 5150.
The use of goods, the figure is wrong.
Please, what
It's
did you get?
5210.
You said what? 52.
10.
Okay. Perfect. So with written compensation, use of goods, other expenses, 5,000. Other expenses, 5,000. Please don't answer.
6730. 6730.
Okay, good. So this is 20. This is 60. So we get a deficit. Answer.
40,710.
14,710.
40,710.
Okay, 40. Balance sheet. Perfect. Now let's go. We have our payable, receivable 3020, and receivable 10150. One zero one what?
50.
50.
Okay, good. Okay, good. That's the end of. You posted everything. Please let's add. Total of this. Total of the non-current assets.
So please, the payables.
Uh-huh.
The payables, when you add, you will not add the rent. I added the rent income to the payables already. So the rent income at
So meaning your answer is wrong.
it
The answer
shouldn't be
again.
part. No, the 1050, the 150 there shouldn't be part of it. It should be cancelled out. The deferred income that you've written.
Please take your time. Take your time. Take your time. Let's go according to
The
mine.
deferred income is part of the payables.
Take your time. Take your time. What's the total of this? 10150. Is that the case?
No.
Yes.
No, it's not correct.
No.
No, it's not correct.
Including the
because
rent
you've taken the rent income
including
to the
the
other
rent.
side.
Please,
One at a time.
please.
So you gave us
I want to
two
task.
options. You said
Yes.
either we add the deferred payment rent to the payables, or we
Yeah.
send it direct to
Exactly. As
the
deferred
income.
income.
So some of us added it to the payable, and some
Exactly.
also sent it direct.
Exactly.
10,000. So it's 10,000.
Fair. 10,000, that's correct.
Okay.
The tender security, why we added it to the payable again?
And I'm what is it? It's a current line. We'll be paying it. We'll be paying it in the course of the year.
I thought we
Okay.
added to
Hey, tenant security didn't add to IGF. How can tenant security be IGS? Madam. That means you didn't get a concept of tender security. It's a liability to you. Madam, tender security is a liability to you. Are you okay? So if it's a liability to you, you pay it within a year. So you can add it to payables. Are you okay? In fact, you have to add it to payables. Or if you want to separate it and treat it as a standalone item, you are correct. Okay. But you can't add it to IGF. It can never be IGF. Okay, thank you very much. Good, so we are done. Please give me a total, please. This plus this plus this. And then this plus this plus this. Please answer. Total non-current assets. Total current assets.
527.
Please, I'm waiting on. Which one are you mentioning? Or, in fact, maybe you. If you not talk me, I'll finish.
So the non-current asset 156527.
156527.
527.
Thank you. Please, what about the current assets?
13350.
When you add them, this is what you get. This plus this.
169877.
169877. Okay, good. Now, add these two. You get 10150. Right? That's the current asset, current liability. Please add this, add all. We don't have time. There's no non-current liability, so dash. So add this plus this plus this plus this. Total. You get 16. In fact, you're supposed to get 16. And there's don't go and add it to. When you get to the total, please don't add it at all. Just go and leave the total you go for current, the asset side, the total asset. Go and put it there.
So, but the
Before going to get,
you said it is deficit,
Yes,
but it's not in bracket.
I'm coming
The
on.
deficit.
Please take your time. Change. Please, this is what you got. Or what deficit are you talking about? The one for the statement of financial performance.
Yes, sir.
It's supposed to be in brackets. Can't you see brackets? Hey, this man, you cannot see brackets.
You just there is in the yeah, this one.
You can't see brackets. Hey,
I'm not seeing it.
Please, you have to see bracket too. So you get the same thing, right? So you add it and see. And your magic. You get the same thing. I said it. Me, I'm not a prophet too. A prophet, right? Okay, good. Thank you very much. This brings us to the end of the first two. Now let's go to the last one. Please, the last one, you already know it. This simply says that what? That's the C part. It says that what? You should prepare a budget performance report. You already know how to prepare budget performance reports, right? Whereby you compare the budget to the what? To the actual. Whereby you compare the budget to the actual. You have been given the what? The budget. Okay, so budget. You've been given the budget. So the actual you got. That's why when you are doing it, you have to take your time. The actual you got. Let's write the actuals again. So the actuals, no, we have revenue, right? So we have the actual. You have budget. You have variance. They have variance percentage. Is that not so? That is so, right? Variance and variance percentage, budget, actual. So please, we have the revenue, we have receipt from government, IGF, donation. So let's go. Receipt from government. IGF. Donation. And grants, the same thing. Right. I'm just looking at my actual load, the actual prepare. 17,100, 1720. I've just copied it, you know. Can you say I just copied it? I've just copied this because this is the actual. Total, what do you get? 220 or something. Yes, 220. Done. Go to the expense. You can go immediately there, whereby they say you prepare the budget performance report. So the expenditure have compensation. So compensation, what do you have? $12,420. Goods and services. Goods and services, what did I get? 5210. Next one. Consumption of fixed capital, other expenses, 5,000. Remember, when you're doing this one, consumption of fixed capital, no, it's not the company's, it's not, let me finish other expenses. This consumption of fixed capital, no, it's not the company's efforts, okay? It's not any special management skills or anything by the company. That's how come they got a certain amount. Are you okay? Consumption of fixed capital, automatically. It is automatic, so that one you don't factor it when preparing the budget performance reports. Okay, thank you. So let's go variance. So they gave us the budget, so let's fix it. Approved allocation, let's go. Internally generated fund, IGF, put it here, how much? 3,000. Now, donor support, 1,000. Donor support, 1,000. Compensation for employees, 10,000. Which one is this one? Okay, let's continue. Use of goods and services. Use of goods and services. Goods and services, how much? 6,000. Other expenses, 5,500. The last one, which is what? Approved budget allocation. 20,000. That's received from government. And on mine is sorry. Okay, good, you are done. This is the budget. This is what you are supposed to get. This is what was budgeted. And this is what you got. Are you okay? This is the actual. Budget actual. Are you okay? So please, what's the variance? Class, what's the variance?
The first one said 2,900. Bracket, adverse.
Second one. You just give me the variance first.
Okay.
Get the variance. Oh, this one, the second one.
1280, adverse.
I sure it's 12.
Yes,
okay,
1,208.
Okay, next one,
First one
please.
is 2,400.
No, I think it's 2,900. Please, kindly subtract 4. So this one. So please look at the second one. Please look at the second one. You budgeted that you are going to get 3,000, but you got only 1,000. It means you didn't achieve the target in brackets. Here you budgeted to get 1,000, but you get 1,200. You have surpassed the what? The target. So positive. Please, what is the total? Total, please. Oh, you let's leave the total. Go and do the total yourself.
Okay.
You budgeted to get 10,000. Are you okay? You got 12,450. Hey, sorry, you budgeted to spend 10,000. You spent 12,400. So you get to 420, right? This is adverse.
Adverse.
You budgeted to spend 6,000, but you spent 5,000. Positive what? Please answer.
790.
790.
Okay. Next one. You budgeted to spend
500.
You budgeted to spend 5,000, but you spent 5,000.
500.
Good. So that's that too. Now let's go. Now what's the percentage? So let's how you calculate the percentage. It is the what? The variance divided by the budget times 100. The variance divided by the budget times 100. Are you okay? So it is 2900 divided by the budget. I'll teach you something here. Pay attention. Divided by the budget. Please, what's the budget? So this one divided by the budget, 20,000.
You get 14.5.
14.5.
Yes, adverse.
14.5 bracket. Okay, next one it is 1280 divided by 3,000 times 100. What did you get, please?
42.67.
42.67 bracket. Now 200 divided by the budget, which is 1,000. You get what?
200.
You know, 20%.
Yes, it's 20%.
Because the percentage is on the top, so you are good to go. Okay, go and add it yourself. You get the total. Come here. Now, 2420 divided by the budget, which is 10,000 times 100. What did you get, please?
24.2.
Brackets. 790 divided by the budget, which is 6,000. Please, what did you get?
13.17.
17, sorry.
17.
500 divided by 5500.
You get 9.09. So 9.1.
9.1 like this.
Yes.
09.
It's 0.9, but if you want, you can put it. Okay.
There's more places.
Okay, good. Yeah, we go and do the addition yourself. So that's that too. They didn't say you should analyze something. Please, I beg you, always do this. Note. Under your workings, anytime you do budgetary variance, anytime you do budget performance report, always write this under note. Brackets.
Bracket means add phase.
Hey, sorry. Bracket means adverse or unfavorable. Let me use unfavorable. Okay. Absent of brackets. Always write this. Because when you look in the marking scheme, when you look in the marking scheme, sometimes they use this. The next moment, they are using this. The next time, they are using this. Who has seen that in the marking scheme? When you look in the past question, sometimes they use this format.
Sir,
Another one, they use a different format.
They
Another one, they use a
confuse us.
different format. And when you
Like
ask them
July
to,
2024
they don't know what they are saying.
marking scheme.
When you ask them to, they don't know. So please, to avoid trouble, always indicate this. Are you okay? Because I've consulted majority of, in fact, there has been an issue for some time, and I've consulted a lot of my colleagues, and I mean teaching. Okay, when you ask them, they all say it's wrong, because you want to adapt to this method. When you adapt to this method, you go to a different method. You see that they've changed it. You go and adapt to that one, they've changed it. So please let us stick to this. This is the general budgetary variant that we all know. Is that not so? So let's stick to this. Are you okay? God bless you very much. Once you write this there, you are covered. Whoever reads it will know. Are you okay? So please, always, when you are solving past questions, be reading the chief examiner's comments. You realize the chief examiner always specifies that if in revenue, if the actual is more than the budgeted, then it is a what? A positive variance. Hence, it is a favorable variance. So that is exactly what you have done. God bless you all, and this brings us to the end of the working. Any questions? Any questions, please? Okay, good. So please, it's now 5:18.
Hello, sir.
You have some small minutes. Yes, please.
I don't know. I just wanted to see the solutions we've done so far. I believe I've taken records of it, but I'm just taking snapshots from the beginning.
No, I'll send you this one. Okay, I'll share it on the platform.